Well, welcome back, everybody. Hope you enjoyed the first break. We are going to be getting resumed and started with our next presentation. So at this point, I would like to welcome in Victoria Bruce, who has over 19 years of sales and marketing experience serving Florida's mitigation banking credit industry and is currently CEO of the Mitigation Banking Group, Inc. So without any further ado, I would like to turn the program over to Victoria Bruce now.
Yes, wonderful. Thank you so much for this opportunity. I love doing this half moon webinar. We did it last year and here we are again right before Thanksgiving. Just want to introduce myself. I'm Victoria Bruce, formerly known as Victoria Colangelo. Changed my name in the past year after getting married. And I've been in the wetland mitigation banking industry for 20 years. I started as an intern. So I was 21. So this is all I've been doing. And I'm not a biologist. I'm not a scientist. I was a marketing business professional. And so I'm able to share the perspective of the business side of the mitigation bank. How do we make money? How do we not lose money? And so, and the supply and the demand of the credit. So after the mitigation bank is permitted is when someone like me comes into play to help a landowner with a mitigation bank actually sell the credits, in addition to doing due diligence to make sure that they're entering into a right investment. So how's my screen look?
Looks good. I have your About Victoria slide in full screen.
Perfect, wonderful. So like I said, I've been doing this since 2004, represent about 25 or so mitigation banks throughout the state of Florida. So I'm a Florida expert. When I have tried to venture out of the state of Florida, I become completely useless. Every single state is so different. The terminology, the context, the landscape, the jargon, everything is so different. So every single state is really in their own little world. And I've been in this bubble in Florida for the past 20 years, and I act as a liaison between the environmental consultant and the mitigation banker. So today I'm going to talk to you about the wetland mitigation banking process from start to finish. The mitigation service areas. Who can you sell your credits to? Mitigation bank sponsor. What does this mean? Regulatory compliance. How indebted we are to the regulatory agencies. And we have to make sure that we are keeping in compliance to make sure that we can continue selling credits and not have our credits frozen in the event that we become in compliance. Permitting a mitigation bank. This is not an easy task, and it takes several years, lots of money, lots of time, and lots of expertise. So we're going to go through how to permit a mitigation bank. Okay, so wetland mitigation banking process. So the first thing is the due diligence. We got to make sure that this property has not only the ecological value to restore it back to its natural state so that it's getting credits, but also we need to find out that there's a market to be able to sell these credits. So it's really twofold. In addition, we're going to talk about construction, maintenance, and monitoring, which is really the nit and gritty to how a mitigation bank is formed and regulated on a constant basis. The permitting, that whole process, state and or federal, how long that takes. On the state side here in Florida, it could take about 2 years to get a mitigation bank permit permitted by the state of Florida. On the federal side, it takes 5, 7+ years to get a federal permit, which is also called an MBI, mitigation banking instrument. So this is a very long process before we can even begin selling the credits. Okay, so site selection. The more damage the property, the more lift yield you will get per acre of land for restoration. So recently, in the past 5 years or so, it's been wonderful to be able to generate so much interest landowners have, and they send me their parcel ID number and they say, would this be a viable mitigation bank? And 9 out of 10 times it's not. But if you are able to identify land that has been ditched or drained, like Austin was talking about in the last presentation regarding the history of wetlands and how they destructed it. They encouraged landowners 200 years ago to dredge and fill these wetlands. And now the Army Corps of Engineers, 150 years later, discovered that that was wrong. And so mitigation banking is a way for the private sector to be able to put it back to its natural state. And based off those efforts, the state and or federal agencies will give that landowner mitigation credits to be able to sell to applicants that might have adverse wetland impacts within the same drainage basin, the same watershed as their project that will be impacting. And so there's lots of criteria that makes a potential wetland mitigation bank good or bad. And what I normally do is I have a favorite environmental consultant that permits mitigation banks. I send her the parcel ID number, and basically she will come back to me and say yay or nay. And if she says yay, she'll say, I think that we can get, 20 credits out of this property. And then we can make a financial decision if we think that that would be profitable or not. There are a lot of expenses that we're going to talk about that need to go into this. So sometimes the bigger picture of looking at expenses and income is more nit and gritty than you would anticipate. So what we're looking for is large contiguous land. Now in Florida versus the rest of the country, the property of mitigation banks is a lot larger. The average size of a mitigation bank is about 800 acres here in Florida, and it can range anywhere from 300 acres to 25,000 acres. And you really want the more acreage, the better, especially on a financial economic outlook, because a lot of your costs are going to be fixed. And so if you're able to have more land versus less, you'll be able to generate more income. Now, with that said, it's a happy dance. And so we have to figure out how many credits might be generated in that area. So a 2,000 acre parcel may be too many credits that we don't need. It's going to put us, 100 years in inventory. So we only need 1,000 acres or whatever it might be. And so we can put into play and look into all the different options to make sure that we're making a good decision. So large contiguous land that's like a wildlife corridor is absolutely preferred. And when I say wildlife corridor, what that would mean is for other wildlife to be able to navigate through. Now, if development is surrounding this parcel that we're looking at as a potential mitigation bank, you won't be able to score as high as you would if the land surrounding you is under conservation easement. Maybe it's owned by the state of Florida or Brevard County or whatever it might be. And that way you are creating that missing corridor. You have a parcel here, and right here, the state does not own. And so this private landowner can create this wildlife corridor, which really gives you a lot of credits for your endeavors. So examples of property that have become mitigation banks are cattle farms, timber, burrow pits, sand mines, agriculture, you name it. It can be a wide variety of different themes that a property could be currently and might be able to be permitted as a mitigation bank. Mitigation service area. So this is a very, very, very big part of mitigation banking. If you were to contact me and say, I need mitigation, I couldn't tell you a single thing until you told me the location. Because without that location, I couldn't tell you which mitigation banks could service it. I couldn't even give you an idea of pricing because it all depends on which mitigation bank can service it. I couldn't even tell you if credits were available or not. And I'd also not be able to give you any kind of price or any information. So the most important thing is just to get a vicinity of the parcel that may be impacted. And then we can find out which drainage basin that property is located in. And then we will evaluate which mitigation banks are located also within that same watershed drainage basin. You can only provide credits to applicants within your service area. Case by case scenario, you may be able to go outside of the service area if there's no other options, but that is rare and fall in between and case by case. So on a more steady approach, you need to purchase credits within your basin. And that's very, very important to understand. And here we go. We're going to talk a little bit more about the mitigation service area, also known as MSA. The geographic area in which permitted impacts can be compensated for at a given bank. Mitigation credits may be withdrawn and used only to offset adverse impacts in the mitigation service area based on the regional watersheds to guide the establishment of the mitigation service area. Drainage basins established pursuant to 373.414 may be used as regional watersheds when they're established based on the hydraulic or ecological conditions characteristics of the basin. Now, there was a part in here that I wanted to say something, but I've lost my train of thought. Let's see. Mitigation credits withdrawn, offset impact regional service areas. Okay, so currently, or in Florida, there are 86 different basins. So that means really there's 86 different markets that we can cover to be able to provide mitigation for the entire state. Now, those 86 basins are encompassed within 5 water management districts. This is one of 5. This is the St. Johns River Water Management District. This one has 23 different basins. And as you can see, they're very small. They are not large. And the reason that these basins are important is because let's just say that we are located in Basin 1, Upper St. Mary's River, and you're located in Basin 3, Nassau River. You will not be able to buy credits within that area. So you have to purchase credits within the same basin. Now, we need to figure out before we permit a mitigation bank, what kind of demand historically has each basin utilized credits? Because some of these basins, they may sell an average of 5 credits a year. Some may sell an average of 30 credits a year, and some may sell an average of half a credit a year. So we have to really understand the historic absorption for us to understand how many credits we anticipate to sell in a certain basin. I'm located in Lake Jessup, Basin 23, here in St. Johns River Water Management District. And it is a nested basin, and it actually doesn't have any mitigation banks within its basin. And so that creates a lot of challenges. And there's no supply and there's high demand. And so we actually provide off-site mitigation within this basin, which Amy Daly will be talking about at the end of this presentation regarding off-site mitigation for areas where mitigation banks aren't available. Now, let's just go through a little bit of these just to kind of give you an idea. So if we look at the Central Indian River Lagoon, Basin 22, there's only one mitigation bank that can service Basin 22. It's actually called the Basin 22 Mitigation Bank. So you really only have one option. Now, if you were to go into, let's say, Basin 18, St. Johns River, Canaveral Marshes to Wekiva, there may be 2 or 3 options available. And so you can be able to price compare. And now there's going to be some competition. So it's a lot different if you're the only game in town versus you have competition. And that's how we are able to set the price and terms for selling the mitigation credits. Now I'm going to show you the other basin maps. So this is St. Johns River Water Management District, 1 of 5. This is Southwest Florida Water Management District, also known as SwiftMud. This is over on the Tampa southwest side of Florida. And you can see these drainage basins are just as small as St. John's. You can see some are larger than others. Charlotte Harbor Drainage Basin is rather large in the shaded blue. This little Manatee River in the brown is very, very small. The little Manatee River didn't have mitigation bank forever. And the first mitigation bank was just permitted. So there were no options, and now there is. Other areas where there are no mitigation banks, this south coastal drainage over here in Sarasota, right here on the bottom left. There are no mitigation banks ever. They've never been there, and they may not never will be. And so if you have an impact in this area, you might not be able to develop it unless you are able to do your own mitigation. And the competition for a mitigation banker is either to do on-site or off-site. And so an applicant that's impacting wetlands can do their own mitigation. And so if you were located in the south coastal drainage basin, you would have to do that off-site mitigation. Now, if you were in Peace River, this large green area, there are mitigation options. So it just really depends on where you're located. Location, location, location is so important in mitigation banking. Here is the South Florida Water Management District basins. This shows you like Central Florida. Disney is right here, let's see, in the Basin 2, Basin 1 area up here on the top. So of course, this area, basins 1, 2, 3, 4, 5, 6, 7, all these ones up on top have very high demand, being located in Central Florida, Disney World, prime property. So there are several mitigation banks that can provide mitigation within these basins, 1 through 8, let's say, maybe even through 11. And then we get into basins 12 through, let's say, 21 or so, and there's lower supply. And then we go into basins 22 through 32, and those are more on the west coast of Florida. And as you can see, you know, basin 29, 30, those are the east coast of Florida. So these drainage basins are very, very small. They are not political boundaries such as a city or a county. They do not go by that at all. They are drainage basins that are established by the state and federal government that show if a drop of water were to fall in precipitation, where would it drain to? Which water body? And so that is how it's determined, so that there'll be a no net loss of wetland impacts should you be able to impact, get a permit, and provide mitigation. All right, here's 3 of 5 of the water management districts here in Florida. This is the Swanee River Water Management District, which is up in the northern part of Florida. And there's about, what, 9 or so, 1, 2, 3, 4, 5, 6, 7, 8 basins within this Swanee River Water Management District. And so if a project is located in the Swanee River Basin, they have to provide mitigation within the Swanee River Basin. So we would evaluate which mitigation banks options are available. And here is the Northwest Florida Water Management District, which is the panhandle of Florida. And you can see how those water management districts are covered. 1, 2, 3, 4, 5, 6, 7 different basins within this one. Okay, so the 5 water management districts, they all permit mitigation banks and permit impacts within their district, and they all have their own rules. They all have their own guidelines. And so even if you're in Florida, depending on where you're in Florida, the conditions might be different. So it's very, very important to understand the regulatory compliance. Mitigation banks require authorization and approval from state and federal regulatory agencies. and the Army Corps of Engineers is the lead agency in the process. As Austin talked about in his last presentation, Florida not only has a federal program with the Army Corps of Engineers, but also has its own state program. And to even make matters even more tricky, several years ago, I want to say 3 or 4 years ago, the state of Florida, the FDEP, Florida Department of Environmental Protection, which oversees all 5 water management districts, by the way. So there's really 6 of them because we have 5 water management districts and FDEP. And FDEP also permits mitigation banks and also permits impacts. And so between those 6 different agencies, where you're located will determine where you need to process your permit. But what happened is there was, many years, a lot of time, and a lot of money spent for Florida to assume the Clean Water Act 404 from the Army Corps of Engineers. So what that meant is if you had an impact and you needed state mitigation, you would either A, go to the Water Management District, or B, FDEP, depending on which type of project you had. FDEP on the state side would get involved if it was a single family home or a utility or a roadway. The other projects, commercial and industrial and everything like that, would fall under the Water Management District. And so they thought, let's streamline it more. I mean, most of the process with the state agencies are already being regulated, and now we have to double dip by now going to the Army Corps of Engineers. Let's have FDEP take care of the federal program as well. And most of the projects will need FDEP state as well, so they can evaluate the projects together on a state and federal case basis. But just recently in February of this year, everything came to a halt. We didn't even have any presumption that this was going to happen, but court cases and legal challenges came into play, and they won. And basically they were saying that Florida, FDEP, Florida Department of Environmental Protection, was not applying the rules and the standards and the guidelines correctly. So the Army Corps of Engineers took it back. And that's been a huge issue here in Florida, because when it was assumed in 3 or 4 years ago, there was about 500 applications that went from the Army Corps of Engineers to DEP, and it took a lot of time and training for everybody to get, on par. Well, as soon as we started to figure it out, they transferred it back, and now there was over 1,000 applications that had to be transferred. And they said, don't worry, if you're at the end of, your permitting process and you're almost there, we're going to pick up where you left off and you'll be fine. And that didn't happen. You had to start over, basically. And so all these projects, I mean, talk about a nightmare for a developer who's trying to get a project authorized by the state and or federal agencies. And so they've had to start over. And most recently, the Army Corps of Engineers actually has outsourced the permitting process to speed up the time frame here in Florida, because there are so many applications. We are so backlogged, and we're taking a process that we let go, and now we're bringing it back to the Army Corps of Engineers. So a lot of uncertainty and things going on with that. And from my experience, I do not think that the 404 assumption will go back to the state of Florida. I think it's here to stay with the Army Corps of Engineers, but you never know. Mitigation banks are sites that help with regulatory compliance by compensating for the impact of development on aquatic resources. They are created through a formal agreement between a regulatory agency and an entity called the Mitigation Banking Instrument, the MBI, which serves like a permit to authorize the bank to sell credits to permittees, who are then responsible for implementing mitigation measures for wetland impacts. Now, one important thing to understand is the Florida assumption of the Clean Water Act 404. That did not have anything to do with permitting mitigation banks. It always stayed with the Army Corps, so that did not change. It was more on the impact side. So a mitigation bank's customer was now told you can't go to FDEP for the federal. Now you got to start over with the Army Corps of Engineers, which was how it was 3 or 4 years ago. So a lot of ambiguity on where to go, who to go to, and the WOTUS definition of that also created some complex because also this year it was established that less regulations would be required for wetlands that are not, that might be ditches that are not connected to a water body. When I started in this industry 20 years ago, I was taught that if there is a wetland that's isolated, it's not connected to any other body of water, here in Florida, you'd only require state credits. And if the water was jurisdictionable to another water body, you will also need federal credits. So you have to go through the state approval process and the federal, and they do not streamline at all. They're completely different. And just like permitting a mitigation bank takes 7 years, getting a project for impacts permitted by the Army Corps of Engineers is also a lengthy process. The state side probably takes, let's say, 4 months on average. And the federal side for impacts, on average, I would say maybe a year. And this would be for a project that is looking to impact and utilize mitigation credits, just on average, not thinking that there's any other environmental concerns with the permitting process. But the mitigation banking industry and the developers are completely at the mercy of the regulatory agencies. And things are changing all the time, and we must just acclimate to these changes. Now, when the changes happen with WOTUS, and they said, you're only going to need credits if it's navigable to a water body, and instead of having the significant nexus. Before this year, when things got rolled back with the regulations, it was very confusing, even for these seasoned 50-year environmental consultants trying to decide if their applicants, if their clients would need federal mitigation as well, because it wasn't clear what needed federal mitigation, because before it was so easy. If it's navigable to a water body, you need federal credits. Now there was a significant nexus and intermittent and perennial streams, and so it got very complicated. So in my mind, although it requires less credits, so I sell less credits on the federal side, it creates a more stable environment for the buyers of mitigation credits to understand what is required and what's not. So to me, that was beneficial, because this is a very complex process, and there's no need to make it more complex, especially with these changing regulations all the time. So mitigation sponsor, basically all mitigation banking sponsor is the landowner who owns the land and who gets the bank or the land permitted. Now, if you had 1,000 acres of land and you think it could be suitable as a mitigation bank, currently, today, it's not worth that much. It might be worth $5,000 an acre. But if you entitle it and you get the bank permits, you might be able to have $30 million in potential assets for these credits. So you are really changing the dynamic landscape and the value of this land by making it a mitigation bank. And you do not have that value until you have that permit in your hands. After that, you're in, and the land is a lot more valuable because now it comes with an MBI, mitigation banking instrument from the Army Corps of Engineers. It comes with a DEP or water management permit that's sponsored by the state, and therefore you can be able to service both. Now, some banks are state only, some banks are federal only, and some banks are state and federal. And if you're a state only bank, you are only going to be able to service applicants or customers or clients that have a wetland that is isolated. If it's going to be navigable to another water body, they will need federal credits. You don't have them, they will not buy from you. They won't even buy the state credits only because they still need the federal, unless there's a federal only bank that we compare them together. But if there's a bank that has both state and federal approval, the applicant 9 out of 10 times will go to the bank that has both, because they need both state and federal, and therefore they don't have to double pay for the mitigation. Every single mitigation bank is different, every single one. There are no guidelines on pricing and terms and all the different things that come into purchasing credits. And so based off of the mitigation sponsor, they're the ones that put all of this into play. There's no oversight on how much you can charge for a credit or the terms of the agreement. That's all up to the mitigation sponsor. The sponsor is responsible for the cost of the wetland development, funding the long-term endowment, as well as the long-term maintenance of the wetland bank to ensure that it continues to function as designed in the future. So not only is this landowner a landowner, but now they are also responsible for all the financial requirements to obtain its first credit release. And those things we're going to talk about a little bit, but in the next slides, but just real quick, there's going to be a short-term construction financial instrument needed and a long-term endowment, which will forever be placed into a trust, and the money will never be touched. And the theory is that based off of 5% interest or whatever it might be, that interest, money based off of the interest, will generate enough income to maintain and monitor these sites in perpetuity. And that bank account gets activated when the last credits are sold. And that's the long term. The short term is any kind of construction that might be needed to obtain the credits. So lots of upfront money coming in, and I'll explain that more in just a moment. Okay, on the Army Corps of Engineers side with the federal permitting, not only is it the Army Corps of Engineers, but they also collaborate with the National Marine Fisheries Service, the U.S. Fish and Wildlife, and EPA. And so all of these agencies work together, which is probably why it takes 7 years, because they all have a say in the permitting before it gets signed. Goal: identify an ecosystem in need of restoration and enhancement. Bring the land back to its natural state. So step one, we find land that's been ditched, dredged, filled. It might have been used for agriculture, logging, timber farm, you name it. And if we can show that we can bring the land back to its natural state, we can obtain credits to be able to sell to applicants who need wetland mitigation credits for their potential wetland impacts on their property. So here are some things to consider when identifying a parcel of land. We want degraded ecological conditions, ecological and hydrological issues. Like I said before, we want to be adjacent to a conservation land. If we can show threat of development, we may be able to get more credits because we're actually showing that, you know, this property, we can get 20 million from Walmart. They will buy this property, but this land has been in my family for 100 years, and I don't want to fall to the pressures of development. But money talks. So maybe I have an alternative option, and I can put this land under conservation easement and get $20 million worth of mitigation credits to sell. And therefore it's a win-win for this family with this land, and they can keep this land in their family forever. The mitigation sponsor, if they wish, they can hold the land forever. You can also donate it, but if you want, you can recreate on that land, and that can be, you know, your family's legacy. A little hint is sometimes mitigation bankers do not put about 2 or 5 acres of the land, they keep it out of the conservation easement so that they can develop a site that maybe they can use to as a lodge, you know, and it's a great way after the mitigation bank is permitted and all the credits are sold. It's also another residual form of an asset, because now you have this beautiful cabin with 1,000 acres in your backyard. So there's lots of ways to be able to obtain this land and keep it in the family forever, but also to be able to have an income producing property. Wetlands and uplands. A wetland mitigation bank is not only just wetlands. It does comprise sometimes of uplands as well. Now, the Army Corps of Engineers won't give you as much or if any credits for the uplands, but on the state side, they do. They act as buffers. They see them as very beneficial to the property. The goal is to reestablish the ecosystem structure and functionality by creating habitat value. The value of these credits is determined by quantifying the wetland functions or acres restored or created. And so basically we fix broken swamps. The worse the property, the better. And how I like to state it is, here in Florida at least, there's something called the UMAM score. UMAM, the Uniform Mitigation Assessment Method. And this was adopted in 2005. I started in 2004 in this industry, so I watched in 2005 as a newbie, an intern, watching this change. And basically what UMAM is it's a scale from 0 to 1. And 0 is low quality and 1 is high quality. And based off that scale, you could have 0.1, 0.2, 0.3, all the way up to 0.9, of course, and 1. And so a low quality wetland may score a, let's say for an example, 0.3. A high quality wetland might score 0.8. An average could be 0.5, 0.6. So if we had an environmental consultant come out to your property and you say, do you think that, how many credits do you think I could, obtain? Now, of course, this is a complete negotiation between the environmental consultant and the agencies, but back of the napkin math, they say, I think you can get 100 credits for this 1,000 acres of property. And how they do that is they would evaluate what they think it is today versus what they think they can make it tomorrow. And so they might go out to the property and say, this is like a 0.3, very low quality ditches, drainage, like not supporting ecological functions. But if we did this and this and this, we restored the hydrology using culverts, we got rid of the invasive species, we planted native species, we did tree thinning, we did all these different types of activities, we could bring it to a 0.8. And that lift between a 0.3 and 0.8, that's 0.5. And we would multiply that 0.5 times 1,000 acres, and that would give us 500 credits. And so therefore it's you obtain as many credits as you can create the ecological lift. And that could be your financial lift as well. Okay, so here's an example. 1,000 acres of land, and depending on the quality of the wetland, let's just say that for every 7 acres will equal 1 credit, and you would get 140 mitigation credits to sell. Now, not all 140 mitigation credits are available on day one. Actually, only 10 to 20% of those 140 credits will be available on day one. After you record the conservation easements, the property will never be developed, and you fund those 2 accounts that I talked about, the short-term construction, which is going to pay for the hydrology, that culverts, the removing the invasive species, planting, 500 native species, the fencing, the signage, whatever might be needed to restore this property back to its natural state. Now, here's an example of the anticipated upfront expenses that are needed. So this is just a case example. We got 140 wetland mitigation credits potentially available. We've done some research, and there is another mitigation bank within the same drainage basin, and they sell for $200,000 of credit. So we're just going to meet or beat them. And therefore, there's a potential of $28 million in mitigation credits. Oh my goodness, everybody gets so excited. But then they realize, oh boy, there's a lot of money that's going to have to come up front before I even see a dollar. And those kind of expenses, and I'm not even going to include the land, and we know how expensive that is, but let's just pretend we've had the land in our family for 100 years, and we're not including that figure, sunk cost. So you can anticipate for this type of 1,000-acre parcel that it's going to be about $600,000 in environmental permitting fees, the consulting. And the reason it's so expensive is because it might take 6 or 7 years, and there's all these diagrams and figures and modeling that need to go into it. And there's probably 4 or 5 different companies here in the state of Florida that specialize in developing mitigation banks. It's a very, very rare industry. It's a very, very large income producing industry. And so I know a lot of companies throughout the country are looking to monetize more by not only working with impacts, but also doing the restoration, the fun part of mitigation, where the land will never be developed. And so any kind of restoration work we do, it's going to benefit the environment and be there forever. The construction fees, like I said, you know, the restoring the hydrology, a culvert, and the exotic species, removing those, planting native species. We've gone to the contractors. We came back with a proposal of $500,000. Now, when we put this money up, we have to put 110% up into a letter of credit. And then once we pay the vendors and we show the agencies, we can get reimbursed. So this money, it needs to be available ×2, because you've got to pay it out twice. You will get reimbursed on one end, but it's a lot of money that needs to be free cash flow that are not, we're talking liquid funds. And then the long-term endowment. And this is determined by the agencies, and most of the time it needs to be funded up front, but you might be able to talk with the state and federal agencies during the permitting process to fund these as credits are sold. You might have to put up, you know, $300,000 now, and you could do the rest as credits are sold, or whatever it might be. So we're looking at, between these 3 different expenses, about $2.6 million. And that's a lot of money to put up front with no assurances that you're going to get a dollar back. Because once we have credits available, you can't make somebody impact a wetland. It's all about timing. It's all about, you know, permitting on their end for the impact. And so there's a lot involved. So this is a very risky industry. It could be very lucrative in the long end, but my favorite saying is, it's not for the faint of heart. Now, selling credits, this is my specialty. So after the land is permitted and we put up the conservation easement and we funded the short-term and long-term financial requirements, let's just say we're going to get 20% of those credits. So 140 times 0.2, we get 28 credits. And so we're going to sell those out. So let's see, that was about 200,000. So that's 5.6. So, but 28 credits, it might take 10 years to sell those 28 credits, depending on which basin, the demand for the mitigation credits. So this is a very long-term investment. Now, there might be a project that comes to you and says, I need 30 credits yesterday. Or you could be tracking a project for 5 years that needs 30 credits, and you're still tracking it. So these projects, you have to be at the right place at the right time, and just kind of wait until the credit demand is there. So the supply of mitigation credits versus the demand for mitigation credits is incredibly important for you to understand and consider before even entering into this industry. The supply means what other mitigation banks are within that service area and how many credits do they have available today? How many credits do they have potentially available, because you're going to get further credits released as you do the construction activities. And so there might be many credits that aren't shown on the ledger yet for those mitigation banks, but they're coming. And so you need to be able to identify that to make sure that you understand how much supply is in the market. Now, demand for mitigation credits is my bread and butter, and it's relatively easy once you figure it out. But the state and federal agencies, they display every single mitigation bank ledger as public information. And for the federal side, it's on the Army Corps of Engineers website called Ribbits, which is absolutely fascinating. And so you can pull up any ledger for a mitigation bank and see everyone and anyone who has ever purchased credits from that bank. How many, the project name, the permit number. And once credits are deducted for a project, they are now associated with that permit. And to be able to figure out a potential demand for a mitigation bank, depending on how much time that it's been permitted, I recommend looking at the historic demand for credits for the past 7 years and putting that into an average. Year 1, you may have sold 1 credit. Year 2, you sold 10. Year 3, you sold 0.5. Year 4, you sold 50. Year 5, you sold 5. Year 6, you sold 0.2. Year 7, you sold 3. And you add up all those numbers, divide them by 7, and that's how you can kind of get an idea of, we're going to sell, 5 credits a year. And that kind of can give you a basis of how long you're going to be in this business for. And sometimes it's 30, 50 plus years, depending on your supply and your demand. So understanding both of those criteria are incredibly important. Anticipated absorption. Like I said, you analyze the mitigation bank ledgers to determine how many credits are sold within the same basin on average. And you're not going to just want to look at one mitigation bank, you're going to want to look at all the mitigation banks within the same basin to understand the whole market, the collaborative effort of all the credits that have been purchased in that drainage basin. Supply. Players within the same mitigation service area. Like I said, you're going to want to see their current inventory, which mitigation banks provide the credits that you're going to be competing for, the estimated future yearly credit sale absorption, and the current and estimated credit pricing in the basin. And that can all be established by looking at your competitors, finding out how much credit they have available. Do they have 5 credits left or 100? What have they sold for in the past? 5 credits a year on average. Okay. And the current estimated credit price in the basin, they're at 100,000. So I'm going to match them 100,000. Now, sometimes you're the first mitigation bank in the service area, which is absolutely fascinating, but a little scary because you don't have that historic knowledge. You can't look at past ledgers because there was no past ledgers. So you're kind of going in there blind. And what am I going to price these credits at? I have no, understanding of what other banks have sold credits for in this basin because there hasn't been any. And so that can be established through understanding what the competition of doing it yourself, on-site versus off-site, understanding how much land would have to be purchased, how much environmental fees would have to be anticipated for the applicant who's impacting the wetlands. And so we want to be able to be competitive with not only other mitigation banks, but also self-permittee responsible mitigation bank, which is on-site or off-site. On-site mitigation is when you have a parcel of land and you might be impacting 1 acre of wetlands, and you put a conservation easement over 5 acres of wetlands on the same property, and you maintain and monitor this property for 5 years or whatever the permit entails. Now, if you were to fail at monitoring and maintaining this property, you might have to double mitigate for it. So there is risk, but it might be less expensive, especially if you have the land available. Now, if you wanted to do off-site mitigation, this just basically means that you own land within the same basin. Very important, has to be in the same basin, and but it's not connected. And so this can also be done. Let's just say, and you'll probably need more for offsite, but let's just say we have an acre of wetland impact, and we will offset it with offsite mitigation with 10 acres of land. And so we'll put a conservation easement over those 10 acres and monitor and maintain it for 5 years or whatever the permit established. So those are different options that we have to be privy to and understand, because that's competition. The applicants don't have to go to a mitigation bank. They can do it themselves. And so you have to understand that as well. Demand, historical data, identifying the mitigation banks that are within the same watershed. Ledgers are on rivets with the Army Corps of Engineers, and in Florida and other state agencies, they have public records as well. And you can go on to, let's say if it was South Florida Water Management District, you can go and look at the ledger for each mitigation bank and see the supply and the demand for each ledger. And it's sometimes fun to be able to evaluate those and figure out, how many credits we anticipate selling a year within this basin. And if there's more than one mitigation credit provider, it might have to be divided into 3 or 4 different pieces. Okay, so here's Rivets, what I was talking about. One of my favorite websites with so much information. This is the Regulatory In Lieu Fee and Bank Information Tracking System, coordinated by the Army Corps of Engineers. And this is a mitigation bank ledger, a federal ledger that I've pulled up as an example for the Colbert Cameron Mitigation Bank. This is a mitigation bank, just to talk about this because every mitigation bank is so different. But this is a mitigation bank that, like I said before, was in the family for 100+ years. And they had a hunting camp on it. They had that ranch, 5-acre parcel without a conservation easement on it. And it was absolutely amazing. But unfortunately, the landowner was approaching older age, and the kids weren't fond of this industry. And so I helped Mr. Colbert sell this bank a few years ago. And actually we sold it. It's the funniest thing sometimes, who buys these things. It's he's a founder and president of a pharmaceutical company, and he wanted land for hunting and recreation, and the mitigation credits just became a bonus. So we've helped him understand the mitigation banking industry, and he's selling credits as well as enjoying the land. Now here you can see pedestrian credits are available. That's freshwater mitigation credits. There's currently available at Colbert Cameron 259.04 credits. So that means today, if you need 259 credits, I can sell them to you from Colbert Cameron. Withdrawn credits, 374.88. That means sold. So if we were able to determine this bank was permitted, and it doesn't say it right here, but I think it was permitted in 96, 98 maybe. So let's just say it was 98. Give it some time. So that's 26 years ago. 374.88 divided by 26. So this bank, on average, has sold about 14.41, 14 and a half, let's say 15 credits a year. And like I said, sometimes it might be 1 credit a year, sometimes it could be 30 credits a year, but on average, this basin, Colbert Cameron Mitigation Bank, which is located in Basin 18, the St. Johns River, Canaveral Marshes to Wekiva. We looked at that on the St. Johns River Water Management District map. This has a big competitor called the Farmington Mitigation Bank, which is the largest mitigation bank in the country, 25,000 acres. And so although this sells 14 credits a year, Farmington might sell 14 credits a year. And so therefore, we have a collective about 30 credits sold every year on average within Basin 18 for both Colbert Cameron and Farmington. Now, as you can see here up on top, it will show the last credit deduction. As you can see here for Colbert-Cameron, the last credit deduction was in 2022. That was 2 years ago. And there's lots of reasons why. In this certain instance, the Army Corps of Engineers is tardy on transferring credits. And I've sent several emails to deduct these credits, and they still haven't been done. And hopefully people are like me to make sure that these credits are deducted, because sometimes the agencies lag on that. Now, sometimes they're quick, but sometimes it takes a while. So that might be the reason for that. Or there might not have been any federal mitigation credit purchases that have been completed. So for example, if you have a project and you've paid me in full, but you're still waiting for your permit, I can't put this on the ledger yet. So a lot of these credits, you may see here, available credits 259, they might not be all available. They could be all sold because this rivets, the federal ledgers, do not show reserved credits. One of the 5 water management districts, St. John's River Water Management District, shows reserved credits on their ledgers, which is very helpful. So even though you're seeing 259 credits available, it does not mean there's 259 credits available. There may be 200 credits reserved, and therefore there's only 59, or whatever the case might be. But as you can see, each project has its own line item with the project name, the permittee number, the permittee name, the company, and the permit number, as well as the credits needed. And they're deducted as such. Now over here on the impact HUC part, where you see these numbers 0308 0101, that's a HUC code, which stands for Hydrological Unit Coding. And this is the Army Corps of Engineers, the federal level's version of a drainage basin or a watershed. Instead, they have HUC codes. So not only do you have a drainage basin that you have to track on the state side, but you have to also understand which HUC code your project is located as well. A state mitigation bank permit and a federal mitigation bank permit might not always be the same. I might be able to provide state but not federal because the service area is different. So you need to evaluate all these different options and make sure that you're protected and the credits are available within your specific HUC code as well as your basin. And then this is information, the bank sponsor, his information is all located on this website, Ribbits. And then in certain instances, if they have a credit broker like myself, my information is all there. And so if you go to Ribbits, you can figure out who to contact. And so that's very, very, very helpful. There's also all this information that I'm gonna share with you as well that's on Ribbits. We're still on Colbert-Cameron Mitigation Bank. You can see here that it's 2,600 acres. It was permitted in 1998. Private commercial. Here, this gives a little bit more information on the bank. The overall purpose of the bank is to enhance, operate, manage, and maintain a habitat for wildlife corridors, for wildlife movement, food shade support, groundwater recharge, water storage and flow and attenuation, and water quality enhancement. Wetland habitats include freshwater marshes, cypress, wetland forested mix, cypress pine, cabbage pond, wet prairies, saltwater marshes, gum swamp, and wet pine flatwoods. The functional assessment method is used is MRAP, and credits are sold to the hundreds. Now that MRAP was established prior to 2005, which is replaced with UMAM, but Colbert-Cameron Mitigation Bank is a prime example of a bank that has been grandfathered in and still operates on a different assessment. So those UMAM scores that I was telling you about from 0 to 1 are different with this bank. If I have a low quality wetland, instead of needing 0.3 UMAM credits, I will need 1 acre for every 1 credit for every acre of impact. But on a UMAM scale of, let's say, average 0.5, 0.6, I would need 1.5 credits to 1 acre on the RAP schedule. And high quality, a UMAM score would be 0.8, On RAP, you would need 2 credits for every acre of impact. So there's different assessments within the state of Florida. So sometimes you might see the pricing's 30,000 over here and 200,000 here, and you're like, well, that's an easy decision. But maybe the assessments are different, and so you're going to need a lot more of this than that. And so you got to play around with the numbers and make sure you're getting the best financial option available when purchasing credits with different assessments. Because in the state of Florida, there are 3 different assessments. There's ratio, which is like RAP, and RAP stands for Wetland Rapid Assessment Procedure. And if you were permitted prior to 2005, like this one in 1998, then you're grandfathered in unless you want to convert it over, which is very expensive and timely. But I do encourage it to try to put us all on the same level playing field. Under the cyber respiratory part of the rivets, you can see all the different documents, such as the credit withdrawals, all the annual reports, even the MBI is on here. So this is very, very helpful in understanding the competition or understanding anything about mitigation credits. Value, and I know we're reaching a part where we need to keep going, so I'm gonna run through these real quick. Evaluating demand and mitigation credits. What is the average number of credits within the past 7 years of credit sales of all the mitigation banks in the watershed to evaluate future market demand? Example of a pro forma on 1,000 acres. 140 credits times 200,000. The anticipated income is 28 million. However, in this case, another hypothetical situation, it's 1.6 million in expenses. We anticipate to sell 5 credits a year. It's going to take 28 years to sell, and that's after it's permitted. So you could add another 5 or 7 years onto that. So it's a very timely process. We talked about the financial assurances, the short-term, construction and operating, the long-term, perpetual management, and these 2 need to be funded before the first credit is released to be able to be sold. Here's the example of expenses again that we've discussed, so you can understand these are really the 3 main expenses other than the price of land that need to go into developing a mitigation bank. The mitigation bank instrument takes approximately 5 years for permitting with the Army Corps of Engineers. They actually did a study and it actually said 5 years was the average, although I would say more like 7. Credits are released upon activity and success criteria. The funding is all needed up front. It's a long-term restoration process and a long-term investment. Here's an example of the credit release schedule, which is very important to understand. As you can see here, this is for the Florida Gulf Coast Mitigation Bank in Florida. And as you can see on the very, very bottom, it says 66.11 credits. So that's the total potential. But here on top, after we obtain all the permits and we put the conservation easement and everything, they're going to give us 29.3 credits. And then they'll give us small numbers, 0.95 after we do the prescribed burn. And then after that, we have to show success criteria, items 4 through 8, and get another credit releases as we've shown success of the mitigation bank. These credits are not released until you can show that the work's been done and that the bank is fully functioning. And if you'd like, you can take a little picture of this QR code and it will bring you to all my contact information. So fancy. And I am available for any questions today, right now, or in the future. Just shoot me an email is the best way to reach me, and I can help you with any of your mitigation needs in Florida. And if it's outside of Florida, I could possibly help you, put you in the right touch with the right person.
Great. Thank you very much, Victoria. Really appreciate it. Great presentation. If anyone has any questions, please go ahead and ask them now. If I don't see any, we will move into our break. But again, I'll just allow a couple moments here to wait and see if we get any questions. All right, don't see any questions. So, Victoria, thank you again for a great presentation. I'm
Thank
taking
you.
off your screen. Oh, actually, I a question just came in. Someone asked, is interest earned on the long-term financial assurance paid to the mitigation bank owner?
No, no. So those funds will compound and they'll stay in the account forever. And then after we sell its last credit is when that bank account kicks in, and it will be utilized for the land to maintain it and monitor it. The long-term endowment, once you put those funds away, you will never see a dollar from it. Those are backed by the state and federal agencies, and that money is going to be forever associated with your mitigation bank. So no, the interest will pay for the land, but it's never given to the landowner.
Okay, sounds great. Thank you for that answer.
Thank you so much for the opportunity, and I appreciate all of this. Thank you so much.